Wesfarmers has come through with their half-year result for 2017 today. Now, the result was a little bit stronger than markets were expecting, but the growth in the result really came through in their resources business rather than their retail entities, which is the majority of their earnings. Now, what we saw in resources was their earnings coming into the top end of the company's own guidance given back in January, and we also saw that they did see a 14.3% fall in mining costs. Those earnings coming in at $138 million. Now, they have already warned the market today that this might not be able to be repeated. They have seen that the current price for coal has come off from those high levels back in November and December, and also the fact that their mining costs fell dramatically was due to the fact that they used a lot of their inventories to sell into the market when prices were elevated. Now, having a look at their retail business, well, their Coles result year on year basically flat, and a lot of this is due to the competition in the space and also the fact that they've seen price deflation. Once again, meat prices have been high, so the on-shelf price has meant that the margins have been very small in that entity, and also their convenience store business, because of lower fuel sales, really did squeeze margins in that area. If we have a look at Bunnings, well, Bunnings' result here in Australia and New Zealand was very strong, and we know that they're in the rollout phase in the UK, so we weren't expecting much from there where they did come through with a loss in earnings. We did see that Kmart was a good standout, seeing their revenues increasing by around nearly 9% over the period, but unfortunately Target's still reworking that business and the margins falling to only 1% and their earnings under pressure yet again. Apart from that, we did hear today that Officeworks. Now, Officeworks has been one of these businesses they spun off into its own entity. A lot of rumours had circulated over the last year that maybe they were going to be looking at selling this business. Today they said they're in the midst of a restructure review, a strategic review, and they might look at IPOing or selling the business in the future, but it did list earnings increasing by 5.1%. Now, the dividend, in line with market expectations, coming in at $1.03 a share, and they also announced yesterday that their current CEO, long-term CEO, Richard Gorder, will be standing down and will be replaced currently by their Deputy CEO, Robert Scott.